Hi, hello, ladies and gentlemen. My name is Yemi Holale. Today, I want to show something about entries and how you can use some little strategies to catch beautiful entries in the forex market. Every traders have different ways of entering the market. It doesn't matter, but what really matters is the outcome of those entries. Okay, so quickly, let's check out what we have here. Now, let's say from this all of this range. And in all of this, we have the internal liquidity range, right? Internal liquidity range, internal liquidity range. So what does that tell you? That the market has created a move like this, a move like this. Market has been creating higher highs and higher lows. Market created higher highs again. Right here, the market has not been able to create any higher low. But instead, what do we see? We have a lower highs and we have a lower low, which means this level at this point, this market has created a break in structure, right? And when there is a break in structure, we are looking forward to see how the market will give us a confirmation for entry. So now, if that should be the case, right here, don't forget where we started from. Market started from here, creating higher highs and higher lows. Higher highs, then we're expecting what? We're expecting higher lows. It couldn't create higher lows. Then from there, we have what? We have lower low instead. So this is a break of structure, this pattern. So we don't have a problem with that. When the structure has been broken, we only have to wait for the other block. So what is your other block right here? The last bullish candlestick before the break of structure to the downside. So which means this is your bearish order block here. This right here is a bearish order block. And one other thing you should consider is the threshold of this order block, which is the half of this movement. Okay, something like this. So this will help you to mitigate your loss, or it will help you to have a more refined entry. So when the market did all of these movements, we are less concerned, but when it's coming back is when we have to deal with. So we expect the price to come back into this range and give us an entry. So when price came back into this range, we find out that the market did what? It retraced and started dropping off, started dropping off. So this is how you can use order block to catch an entry, and this is on 4 hours time frame. We can go on to a lower time frame to still analyze where this can be an early entry on a 1 hour time frame. But this is January. The data 1 hour may not get here, only if I will be using trading view in the future to show this. But then this is how you can use this for entry on 4 hours time frame. And then one other thing, we've talked about the order block. Now let me show the fair value gap, because this all of these are in PDRs for institutional reference points. If you want to trade like the ICT, if you want to trade like the smart money concept people, so this is what you do. If this has happened for you, this is other block that we used here. So with that, we can confidently say we've made something from this trend, from this drop here. This over 100 pips would have made something out of this. Okay, so that is that. Then we have something again that we have to look at. When we have this structure as our low, the market went here. From here to here is a swing failure. Market could not break the previous high here. So this is a swing failure. If we carry your trend line analysis, you do this. This is a swing failure. So what does that tell you? When you have a swing failure, at the same time you have a low, and the low of the previous swing trade or the retracement that you had has been broken. This is here. So when this has been broken, that means there is a shift in this market as well. So we expect the market to come back to a particular level for a supply. And where would that level be? It could be anywhere else. But then this is how you can use a fair value gap or imbalance to target where you want in the market from here. Okay. So this is a void level from this candle to this candle. The whole of this level has not been balanced. Okay. So this is imbalance here, called the fair value gap. Now, what do you see? The market traded down. We have no problem with that. Only for the market to come back into this void and give us an entry. So the first time we tap into this, when we go to a lower time frame, maybe we would have found opportunity to make a little out of this, over 40 pips. Then the market did this. Then eventually the market raided all of this void before it started dropping. So which means we would have used other blocks to catch this trade from here. Then would have used fair value gap to catch this trade from here. Okay, so these are these are one of those that you can use to catch entries in the forex market. I hope this will help you. Just try as much as possible to go to a lower time frame again, or to go to other time frame to analyze this. Go to different currency pairs to analyze this. Look out for fair value gap, look out for other block, and this will help you to refine and have better entries in your next trades. All right, thank you and have a wonderful time.